Bitcoin's price is crashing. Now, at the time of this recording, probably going to change by the time you watch this, but we're at about 85,000.
Bitcoin's drop looks dramatic, but the real story hiding underneath is much bigger than the red candles. Whenever Bitcoin drops this hard, the internet starts inventing causes out of thin air. One big red candle and suddenly every headline gets blamed. The truth is that those fast explanations usually collapse the moment you look at actual data. A move this size rarely comes from a single event. It's usually tied to liquidity tightening, crowded positions unwinding, or larger risk pressure bleeding through the whole market. Anyone relying on guesses gets blindsided, while anyone paying attention to real metrics stays grounded. Stick around until the end of this video as Mark Moss breaks down why this crash caught people off guard.
Hey, I am Maria with DailyDoseCrypto. Have you noticed that gold, silver, and Bitcoin have hit all-time highs recently? Is this a coincidence, or are smart investors onto something? The dollar is depreciating, inflation is eating up all of our cash, and the US national debt is through the roof, hitting new highs every day. That's why people are shifting to alternative assets like gold, silver, and Bitcoin. We at DailyDoseCrypto have partnered with ITrust Capital, your one-stop platform to buy and securely store 80+ digital assets, including Bitcoin, gold, and silver to hedge your future against debasement. With over 200,000 accounts, 15 billion in transactions, and 11,000 plus positive reviews, they're helping real investors build long-term wealth with their tax advantage, IRA, and PCA, which is a premium custody account that supports the highest level of custody and security in the space. They do this all with institutional-grade custody through partners like Fidelity Digital, Fireblocks, and Coinbase Prime, keeping your assets secure while you can trade 24/7. Fees are just 1% per transactions with no monthly or annual costs. Getting started is simple. Sign up for free and fund an IRA or PCA today. You'll receive a $100 bonus and start growing your assets the smart way. Click the link below to open your account now and begin your journey toward generational wealth.
But before we go anywhere, before we talk about the seller, before we talk about the microstructure, before we talk about the timing of the moves, we have to set the right frame, right? This is when I always go back and I listen to good old Uncle Warren Buffett, the Oracle of Omaha, because he has all these little lines, these little sayings, ones that I think about a lot, especially when markets start acting very emotional like right now. And he has a really famous one. He said, quote, "If you're not willing to own something for 10 years, don't even think about owning it for 10 minutes, end quote. And of course, the other one everybody quotes all the time is price is what you pay, value is what you get. But the one I think fits this moment right now the best, the most perfect one for this moment is in the short run, markets are a voting machine. In the long run, they're a weighing machine. Now, if you've been around these cycles long enough, you know exactly what he's talking about, right? Because right now, the voting machine, it's in full panic mode. Bitcoin, again, it's down 35%. It's a big move. But really, when you look at the bigger picture, it's not unusual for Bitcoin. In fact, it's the third drop of this size in just this current cycle. And we've seen dozens of these in previous cycles. But what is unusual is the sentiment this time. That like this drop right now, this must mean something is fundamentally wrong. So let's walk through this very carefully and take a look. Now, before we get to the fundamentals, let's stay on Buffett just for one more second, because understanding how he thinks, how he became one of the wealthiest men in the world, is something that we should all learn from. And I know he's not a big Bitcoin fan, but we can still learn from him. Now, Buffett never buys something and then sits there staring at the price every day. He said over and over, he doesn't care what the price does today or tomorrow because he's not buying the ticker, right? He's not buying the price. He's buying the business. And if the business is getting stronger and the price is falling, then he doesn't panic. He just buys more. Okay, so before we get emotional about, the red candles, before we get emotional about the headlines, what we want to do is we want to do exactly what Warren Buffett would do. We want to zoom out, just ignore the noise for a second, and let's get to the facts. Because the facts, they paint a completely different picture than the emotions do. Okay, so now that we've got the right frame of mind, let's go straight into the first big question. Why is the price falling? Like, what happened? Now, before we get into the market makers and the forced selling and all that, we have to start with something way bigger than Bitcoin, something that affects every asset on earth, and it's liquidity. Because when liquidity disappears, it doesn't matter how strong the fundamentals are. It doesn't matter how much demand there is. Everything gets hit. And that's exactly what's been happening over the last 6 to 8 weeks. Now, the first thing most people missed is that the US government went through the longest shutdown in American history, 43 days. And when the government shuts down, spending freezes. The Treasury General Account, the TGA, it's the government's checking account, swells up, and all that money that it swells into it comes out of the system. And of course, every time the TGA jumps, you see risk assets start to pull back because the liquidity is getting drained from the exact places the markets rely on for the day-to-day funding. Now, on top of that, the Federal Reserve, they're still running QT, or quantitative tightening. So while the shutdown froze fiscal spending, QT was pulling reserves out of the banking system. And if you watch the bank reserve levels, you can see the floor getting hit pretty quickly. Now, this isn't a guess, right? It's all in the data. Reserves fell back to the same danger zone we reached in 2019, right before the repo market blew out. And while that's happening, the reverse repo facility, it's basically empty, which is another major signal that the system is getting tight. Now, the reverse repo dropping to near zero means money market funds have nowhere to park excess cash because no excess cash. Overnight borrowing costs between banks have been creeping higher and higher and higher for weeks. Dealers are pulling back risk. Leverage is coming down across the board. So when all this happens, you get a temporary liquidity vacuum. All right, now this hits everything. It's just that Bitcoin reacts to this the fastest. Okay, so before we even get to the trigger, we already see the liquidity environment that explains why every risk asset's been under pressure lately. Now, if you don't understand that, you're going to end up blaming the headlines instead of looking at the money flows that actually move market. Okay, but now that we understand liquidity, and that alone explains a lot, right? We have to get into the part that almost nobody understands. This is where things get a little bit weird because the price action that we've been seeing the last few weeks doesn't look like fear, right? It doesn't actually look like normal selling pressure. It looks like something broke. And the date everything changed was October 10th, 10/10. Remember that day? That's the day President Trump sent out the tweet. He said that he was going to put 100% tariffs on China, and then it triggered one of the largest liquidation events in crypto's history. Almost $20 billion in leverage positions were wiped out in less than 24 hours. Now, that's not normal, right? Bitcoin didn't drop 50%. The ETFs didn't give all the redemptions back. There wasn't some major macro shock, but the size of the forced liquidations was bigger than what we saw in some of the 2022 candles. Now, here's the key. When liquidations get that big, it's not just traders losing money. Market makers took this too, right? These are the firms that provide the liquidity, that lift the books, that stabilize the volatility. And when they get blindsided, when their hedges get liquidated, and when exchanges use ADL to force close their positions at horrible prices, they don't just get hurt, they pull back, right? They reduce risk. They have to shrink their inventory. They quote smaller sizes. That starts to leave holes in the market structure. And that's exactly what we saw on 10/10.
Before diving into sellers or timing, the first thing is to get the frame right. Buffett's old reminders help because they pull you out of the panic. He never cared about the daily ticker. He cared about whether the thing he owned was getting stronger over time. If value improved while price slipped, he treated it as an opportunity. That mindset fits this moment. Bitcoin has taken hits of this size many times, but people are acting like it's rare. Liquidity has been tightening for weeks across all market. When money thins out, every risk asset gets hit. With that in mind, the recent move stops looking unusual.
We can take a look at Binance, for example. They had one of its largest forced liquidation clusters ever. Wintermute's CEO publicly said Binance's ADL system malfunctioned and hit them with fills that, quote, make no sense. Now then, right after that, we saw the collapse of Stream Finance. It was a $200 million delta neutral fund. They lost around $93 million and went bankrupt. Now that's a fund that wasn't supposed to lose money, but their hedges, they got caught in the same ADL chain reaction. Now, when you put all that together, a major liquidation event, ADL kicking in, a large fund blowing up, you end up with exactly what we've been seeing ever since. And it gets even more strange than that. For almost 2 weeks straight now, someone's been selling Bitcoin every single morning at 9:30 a.m. Eastern time, the exact moment the U.S. stock market opens. The same pattern, the same timing, the same pressure. This isn't retail panic, right? Retail doesn't wake up and then dump Bitcoin at the opening bell on Wall Street with that kind of precision, right? This looks like has to be a mandated seller, right? This is a fund that's unwinding. It's a market maker that's de-risking their portfolio. Somebody's closing a position because they have to, not because they want to. And the technicals back all this up, right? We just hit the lowest daily MACD reading in Bitcoin's history, lower than the COVID crash, lower than the FTX collapse, and yet the price is only down 33%, right? That'd be impossible in a healthy market. RSI hit 21 on the daily. That only happens during true capitulation events, but there's no capitulation this time. The price action is all pressure. It's no panic, right? That's the tell that we're looking at. This is one or maybe more forced actors unwinding through a broken microstructure. The 10-10 event, it damaged liquidity. Now, the seller that we're seeing is basically dragging their inventory through the weekend market. All right, so now you understand the liquidity was low, and then the 10-10 event was the trigger that sent this cascading down, right? But then we need to zoom back out for a second. We have to look at the fundamentals because this is the part that really matters, at least to me, right? Price, it moves around. Sometimes it moves around pretty violently. But if you care about the long-term outcome, and of course, that's what Buffett always tells us to look at, what I look at, then what actually matters is whether the asset you're holding is fundamentally getting weaker or stronger. So while everybody's panicking about the price, dropping 30, 35%, fundamentals, they've been doing the exact opposite. As a matter of fact, they've been getting stronger in ways we've literally never seen before. Let's start with a couple of them, like institutional adoption, because that's changed more in the last 2 years than in the previous 10. Spot Bitcoin ETFs finally launched in January. What most people don't realize is that these ETFs created permanent pipelines from traditional financial institutions into Bitcoin. I mean, we're talking pensions, endowments, insurance companies. We're talking about boring money, slow money, right? This is the exact opposite of the leveraged traders that blew up on 10-10. Then we have the credit side, which is something I've been talking about for a really long time. I mean, we have JP Morgan, one of the largest banks in the country, in the world, is now accepting Bitcoin as collateral for institutional loans. I mean, that's a massive milestone because it means Bitcoin has crossed the line from being just an asset that you can speculate with to actually being an asset you can borrow against. Now, once Wall Street starts accepting something as collateral, then it enters the credit system. Once it enters the credit system, demand becomes structural, not cyclical. And it's not just JP Morgan. The FHFA, which regulates Fannie Mae and Freddie Mac, they announced this year that mortgage underwriters are allowed to consider Bitcoin holdings when evaluating a borrower's financial strength. Think about that for a second. For decades, Bitcoin was treated like some fringe internal asset. Now it's something that helps you qualify for a mortgage. I mean, that's a massive shift. It's a regulatory shift, which is even more important. And custody has gone fully institutional as well. Fidelity, Citi, US Bancorp, Standard Chartered, they're all running regulated Bitcoin custody operations now. And the important point is that when institutions buy Bitcoin and custody it with firms like that, those coins, they disappear from the liquid float for years maybe, right? They're not trading on Binance. They're not part of this noise. They're effectively locked away in deep, dark, cold storage. Bitcoin mining investment, it hasn't slowed down at all. Hash rate hit a new all-time high this year. It means the network is more secure than it's ever been. And when you see miners investing hundreds of millions of dollars into hardware, energy contracts, it tells you one thing. You're not worried about short-term price moves. And then you've got sovereign adoption starting to accelerate. The US now holds over 200,000 Bitcoin between seized assets and strategic reserve discussions. Now, multiple states are exploring Bitcoin treasury allocations. Other countries are openly studying strategic Bitcoin reserves. Now, this part's still pretty early, but the direction, it's undeniable. So when you stack all this up, institutions are accumulating, Bitcoin entering the credit system, mortgage underwriting guidelines changing, regulated custody exploding, minus security at all-time high, sovereign interest building. And then you compare it to the price dropping 35%, it becomes really obvious what's happening here, all right? This is exactly the kind of setup that long-term investors wait for when the weighing machine hasn't caught up to the voting machine yet, or what I like to call the mismatch multiplier. How far off of reality is to perception, the mismatch. The greater the multiplier, the better the opportunity.
When you lay out what actually happened, the drop starts to look far less mysterious. Binance got hit with one of its biggest forced liquidation clusters ever, and even Termute's CEO said their ADL fills made no sense. Right after that, Stream Finance collapsed after losing over 90 million in a hedging chain reaction. That kind of damage knocks market makers off balance, and when they pull back, the order books thin out fast. Then you get the strange pattern that followed. Someone dumping Bitcoin every morning at the exact moment the US market opened. This is what happens when a big position gets unwound into a market with no support. Thank you for sticking with us until the end of the video. If you found this breakdown helpful, make sure to like the video, subscribe, and check out our other uploads for more content that helps you build smarter, live better, and stay ahead. See you next time. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.